Today, I want to talk about how AMC may be about to make a major acquisition that would lead AMC to becoming profitable as soon as the deal is done. I want to explain the possible options for AMC, how that would lead to profitability, and why profitability is good for the AMC squeeze. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, you may have seen on the AMC website this section for Cinemark branded items. It says there's no products current in this category, but check back later. Now, I think there's a number of different options as to what this could actually be. Either it's a fake screenshot, maybe it's a mistake, maybe AMC is about to acquire Cinemark, maybe they're going to form a partnership, or maybe AMC has been hacked. I don't think it's a fake screenshot because if you search for AMC Cinemark branded items, you do get this result in Google for the AMC Theatre's website. It talks here about how AMC will soon be selling Cinemark branded items. Now, alternatively, it could just be a mistake, but I think the chances of that happening are very, very low. For this page to appear on the AMC website, it's been specifically coded and reviewed by the AMC Computer Tech department. AMC's marketing team has clearly been in contact with AMC's website coding and website development team, and they've clearly created this new page and put hours into coding a specific Cinemark brand items page. Now that mainly leaves us with the fact that AMC is either about to acquire Cinemark or form a partnership. Now Nick has asked ChatGPT exactly why AMC would sell Cinemark branded merchandise. ChatGPT said it's unlikely that AMC, one of Cinemark's top competitors in the movie theatre industry, would sell Cinemark branded merchandise. They said it's possible the webpage or hyperlink you are referring to may be outdated or incorrect. Now, we've already determined that it's not a fake screenshot and it's not a mistake, so why would AMC be selling the items of one of their top competitors? Because as ChatGPT said, it's important to note that while movie theatres may sell merchandise related to movies, characters or franchises, it's less common for them to sell merchandise specifically branded with the name or logo of another movie theatre chain. Because obviously there may be licensing or legal issues to prevent or discourage such sales. But obviously if AMC is just about to acquire Cinemark cinemas, it would make sense for them to advertise their products as well. Because obviously over the next few weeks or the next few months, they'll be under the same ownership and profits will be diverted to one entity. Now I do want to talk about why an acquisition of Cinemark for AMC would be a great idea and how it would lead to more profitability. But first let's talk about more evidence as to why AMC may acquire Cinemark. Adam Aron has clearly stated in the past that he has two main plans for AMC. Main plan number one is recovery, to bring AMC back to pre-pandemic levels. And number two is transformation, through new ideas and bold mergers and acquisitions activity to create a grander AMC that does much more than we did back in 2019. Obviously, Adam Aron has been transforming AMC through new ideas, new opportunities and new options such as store-sold popcorn and the AMC credit card. All that's left for AMC is now bold M&A activity or mergers and acquisitions activity. We also know in the past AMC has also previously taken over former Cinemark cinema leases in Chicago. So AMC already has some kind of working relationship with Cinemark cinemas if they've already taken over some of their locations. Obviously, Cinemark is struggling and has filed for bankruptcy, and therefore a sale to AMC on the cheap makes complete sense. Now, an acquisition of Cinemark by AMC would be great for AMC because it effectively transfers Cinemark's business into AMC, bringing tons of benefits. Obviously, it would massively increase AMC's revenue, while yes, it would also increase their expenditure as well. AMC would benefit from more economies of scale. Economies of scale is basically where as your business grows, you can obtain more things at a greater discount, aka AMC's costs will end up reducing. AMC can buy and manufacture cheaper popcorn and cheaper snacks because they'll be buying double the amount. AMC can obtain cheaper uniform and cheaper staff training because they'll be training double the amount of staff. AMC would also be able to negotiate better lease deals because they'll be leasing double the amount of cinemas. So therefore, by purchasing Cinemark and combining both companies into one, it would increase AMC's revenue while decreasing their costs, leading to more and greater profitability. That would obviously mean that AMC would become a profitable entity, effectively destroying the short thesis even more. Guys, be sure to sign up on Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to a whopping 15 free stocks. They've also got entirely commission-free trading, but most importantly, Moomoo is very easy to use, it's very clear and simple, they've got tons of technical indicators and advanced charting tools. With Moomoo, they've also got free 24/7 customer support, and you can also trade around the clock with their full extended trading hours. Now, alternatively, there is a final option which I think has a tiny chance of probability, and that's that AMC was hacked by the hedgies to create FUD and to create an exit opportunity for one of these shorts. Nick tweeted saying, "Remember the popcorn shortage FUD? Do you also remember the noise for some firm to cover or close out of their shorts as they said that Amazon had acquired AMC?" And as StockSense Frank tweeted, he said they're making it look like it's company events causing the drops, but actually it's obviously just hedge funds shorting the price of AMC further. He said they're targeting their attacks for when there's news from AMC so they can play into their narrative. And he said, "I'd bet that short borrowing and dark pool trading are at their peaks or at their highest just before AMC announces news. It's specifically set up so that whenever AMC announces some kind of news or whenever there's an acquisition rumour, the stock price drops further as it's being shorted more heavily. We can see in the past, every time AMC has announced news, the stock price has fallen the exact same day. Whether they've been announcing a reverse split, their proxy statement, their settlement agreement, everything AMC has announced over the last 2 years always leads to the stock price falling further because the shorting is increased." Something funny I also came across is this tweet from Simulation Ape Nation, who said that Cinemark has just been given an increased price target of $20 per share because of improved optimism about box offices. But it's funny, the exact same people gave AMC a lower price target of only $4.50. So here we have two cinema companies operating in the exact same industry. One price target has been increased while AMC's has been decreased. But I imagine a funny reason for it is because one company has 108% institutional ownership and the other is owned by retail investors. Although these price targets are absolutely ridiculous, they're not wrong about this quarter being an absolute monster quarter for movie theatres revenue. As StockSense Frank tweeted, he said there's still a lot of huge films coming out in the next few months that are going to do big numbers. He said it will certainly be the biggest summer in years, if not ever, and I bet we'll be seeing articles with titles like "The Movies Are Back." As you can see, April has already grossed $236 million at the box office, which is better than any year other than 2015, even better than 2019, 2018, 2017 and 2016 as well. AMC could potentially be on track for 2023 being the best year ever for movie going. I think really it all makes sense because abusive shorting is not random acts of renegade hedge funds, but rather a coordinated business plan that's carried out by a collusive consortium of hedge funds, prime brokers, and their friends at the DTCC and major clearing houses as well. Obviously, abusive and manipulative short selling cannot just be enacted by one hedge fund. There needs to be tons of people in on the target. These hedge funds need the help of market makers, they need the help of clearing houses and the regulators, and they also need the help of the mainstream media to drive that short and distort theory. They need those FUD articles to push the price down and to illegally manipulate the stock, but obviously with the help of the regulators, so nobody gets fined or imprisoned. But a joint statement by the Department of Treasury and the Federal Reserve and the FDIC has just been released, saying that banks will need to review the short sellers' financial strength, creditworthiness, and track record of engaging in short selling activities before providing them with IOUs or any other financial services. Obviously, because the banks are struggling so heavily at the moment, they need to be very, very careful on who they're lending money to. And therefore, if these short sellers aren't very financially strong, have tons and tons of risk, aren't very creditworthy, it's likely their loans may end up being pulled. This would obviously be incredibly damaging for these short sellers, causing them to lose tons and tons of available margin, effectively forcing them into a margin call. And obviously if these shorts are indeed forced into a margin call, they'd effectively be forced to sell off their assets and also forced to close out of their short positions. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.